Thanks everybody for joining us today. Seems like the majority of the folks have logged in. I'm sure we'll have some folks log in here shortly as well, continue to join us. But we'll get started as really appreciative. Thanks for the support on these webinars. We think we got a lot of things to cover and a lot of value to add for the design world as you guys are developing projects around the ITC. A little bit about us, Walker Blue. Walker Blue is a specialty energy tax incentive firm that specializes in a couple different energy tax incentives, but the ones that are most relevant to this group are the um, 179D as well as the investment tax credit. Um, with us, you got Josh Howes, who's our CEO. He's the former CEO of Blue Energy Group that ended up merging with our firm, with my firm, Walker Reed Strategies, so to form Walker Blue. So I'm sure a lot of you guys who know us have been aware of that. Now it's starting to become old news at this point, as we kind of turn the corner with the merger. So. Again, we appreciate everybody's support as we've transitioned and whatnot. So, um, Josh, you want to give a little background on yourself?
Sure. Yeah. Thanks for joining us. Josh House. We've been doing as Blue Energy Group and other places. We've been doing 179D since 2011. And when the Inflation Reduction Act was passed in 2022, we added the ITC services. We just had a lot of clients that were needed in need of those services. We we end up finding ourselves doing a lot of work for public entities because that's kind of the nature of our 179D business, and that's the reason that ITC was so needed by our clients. So we end up helping a lot of public school systems, county governments, in particular those two entities, and well, in the nonprofit world as well, to collect their ITC checks really for them. So we have a lot of experience having done this now for almost 4 years with the ITC. And yeah, so looking forward to as we enter this new phase of ITC, especially with solar, with it, with some of these expiration dates coming along and with the foreign entities of concern being a new thing this year. So that's kind of going to be the focus of our webinar today, is just to kind of how to prepare your projects for the ITC so that you don't miss out on some of the money that's available by, failing to plan.
Yep, that's great. Um, all right, so we're assuming that most of the folks who are joining us here today have experience or are knowledgeable at least around the basics of the ITC. For those of you that may not, we're going to do a quick overview. Actually, before I do that, I'm going to answer a question regarding, um, just housekeeping items. Feel free to use the question and answer box to submit any questions that you have throughout the presentations. We will do a Q&A at the end of the presentation. So we're happy to take lots of questions. It helps kind of give some relevance to some of the topics we're talking about. And additionally, post webinar within a couple days, we will be sending out a recording of the webinar, and a follow-up as well. So we just kind of little housekeeping items there so that you guys are aware. So let me dig into the ITC and what the opportunities are for those of you who are not familiar. So ITC includes the investment tax credit, includes technologies like solar, wind, geothermal, energy storage, combined heat and power, fuel cell waste, energy recovery, biogas, and microgrid controllers. Um, there is a base rate of the tax credit that is 6%. And then there's a handful of adders and ways to jump that up pretty substantially, specifically post the Inflation Reduction Act, that got bumped up pretty nicely. So one of the main focuses here, and one of the main areas that brings the tax credit being really, really sizable and tangible is the five times multiplier, which brings your 6% base credit up to 30% for facilities that are either meeting prevailing wage and are paying the prevailing wage and registered apprenticeship following those rules, or smaller projects that are under a megawatt are still exempt and eligible to receive the five times multiplier if they fall under that sub 1 megawatt category. And for geothermal, it's like 284 tons, I believe. So if it falls under that point, you're in a position that you automatically get the five times multiplier. And then there's a handful of adders. There's a 10 percentage point adders for facilities meeting domestic content requirements for steel, iron, manufactured products. We'll get into that a lot actually during this webinar. And there's a 10% adder if you're located within an energy community, which is a simple lookup. For the most part, we can help you with that if you need some assistance. But it's essentially just, plugging in an address to the IRS's site and confirming whether or not the project falls within the community or not, and then you pretty much automatically get that 10% adder. And then there's a 10% adder for projects located. It's actually 10 to 20% for projects located within a low income community. That is not an automatic adder. That one is an application based adder. Kind of a good takeaway there is if you have any projects or any clients that are started construction or about to start construction, um, and they are within those low income communities, the application period opens up here in February. There's a 30-day window to get the project applied for. You have 4 years to complete the project if you are awarded that low income community bonus through that application process. So again, it's really important that you track that so that we run into a ton of projects that we get to the end, they're like, here's all my information, get me this tax credit. And we start working on it and we realize it's located within the low income community and we're like, hey, did you apply for this? And it was missed, wasn't thought about, and nobody ever applied for it. So, it's 10% or 20% that potentially could be wasted if it's not caught. So really important that those timelines are met. And, if the project is a really long project, you can apply, every year until the project is complete. If you don't get it the first year, you can apply, the second year. And then if you finish the project within that year, great. If the project is a really, really long project going 3, 4 years, you could literally apply every year if you're fall within that until you get the award or don't, but you could at least try. Um, so, there's entities that are eligible for the direct pay or sometimes called elective pay. It's tax exempt entities, government entities that are fully exempt, like 501A, 501C, 501D. So, states as well, counties, cities, political subdivisions, school districts, tribal governments, and Alaska Native Corporation and Tennessee Valley Authority as well. So that is a very powerful tool that got added under the Inflation Reduction Act, which allows the clients to get a direct cash payment back from the IRS directly in the form of a refund. There are some requirements to get there, but again, those are all things we can help you with. But just big picture, that's the ITC in a nutshell, of what the potential opportunities are for your clients or you, if you're looking to take advantage on the matter. So, and we'll talk a lot about the direct pay today. That being said, there's still a lot of benefits with private sector clients who are doing projects that can definitely take advantage of it. And we have lots of expertise on that side as well. But yeah, so. All right. So Josh, when we get into discussing, kind of from an engineer's point of view, Josh is a professional engineer by trade who now does a lot of consulting more than anything else for this energy world. But when we look at some of the facts that like kind of OBBBA and post OBBBA that could compromise a project or could um, potentially harm the ITC value. You want to talk a little bit about that?
Sure. So, the one thing that the big beautiful bill did was well, two things really. It set up expiration dates for certain technologies, particularly solar and wind. And then the second thing that it did was it implemented what we call FEOC, the FEOC, Foreign Entities of Concern requirements that started this year, January 1st of this year. And so, before the big beautiful bill, we could pretty well be brought into a project at the end, retroactively kind of go through all the documentations, assuming that you're under a megawatt, you don't have to worry about PWA. We could file all the paperwork, everything's in play, the ITC's in play, we could calculate domestic content and whatnot and and get your credit. Now with the big beautiful bill having set up these expiration dates, we have to do a lot of stuff pre-project. And so um, the engineering needs to start, the ITC strategy needs to start before construction because when you're thinking through your engineering development, take for instance the solar with the expiration date, right? So we deal a lot with are we going to be under construction by July? So the first expiration date is July 4th of 2026. If you're not under construction by that day, then well, let's say it the other way around. If you are under construction by that day, then you are qualified for the ITC and you don't have to worry about how long the project takes. Generally speaking, there's no end, you don't have to have a completion date, to meet in order to qualify for the ITC. So that's one thing to think about is like, when are we actually going to start construction? Or are we going to start on time? Are we going to end on time? If we don't start on time, the other expiration date is December 31st of 27 for solar. If you miss your July 4th start date, then you have to be completed by the end of 2027. So we have to be thinking through that part. The second, another one to bring up is on direct pay. So David just went through the direct pay and who's eligible for direct pay. If you're a direct pay customer and you don't qualify for domestic content, so any project that begins in 2026 that doesn't qualify for domestic content does not qualify for the ITC. So you have to be thinking about domestic content with. And then the last one that I mentioned was FEOC. So this year we have FEOC requirements to deal with for everybody. And if you don't meet the FEOC requirements, you don't get the ITC. So the nice thing about geothermal is that geothermal doesn't have any of these issues to deal with. They do have the direct pay issue, but they don't have the FEOC or the expiration dates to deal with. But if you're doing a solar project, you also have to qualify for FEOC. And that doesn't matter if you're direct pay or if you're getting a tax credit. You have to meet FEOC in order to qualify for the ITC. So all these things can't be done after the fact. If you don't intentionally design your project to get started on time or to get completed on time, meet domestic content or to meet FEOC requirements, then you're not going to get the ITC. So you have to be thinking about these things before you start construction.
Yeah, Josh, when you mentioned beginning construction in 2026, um, you're referring to projects that were not previously safe harbored as starting construction. Do you want to jump into that a little bit?
Yeah, we can. Yeah, so I mean, the guidance came down on safe harboring, start of construction. So for solar, if you're a megawatt and a half or less, you still have two pathways in order to actually like start construction. So the definition of starting construction would be paying 5%. The owner of the project has to pay 5% of a non-refundable commitment towards the project. And that would, once that payment is made, then that actually begins the construction of the project. The other way is the physical work test, where you actually have boots on the ground and you're doing some sort of construction, physical construction of a significant nature. So for solar, that would be like maybe, you know, digging your foundation for your racking system, or installing your racking system. For geothermal, it could be like, putting your pipes in the ground and things of that nature. If you're over a megawatt and a half, you only have the physical work test um, to rely on. You cannot make a 5% payment and start construction. So the definition of starting construction is one of those two ways. If you got that done in 2025, then you don't have to worry about FIAC. You don't have to worry about the 100% haircut for solar for not meeting domestic content. But if you didn't and you're starting those projects this year, then you have a few things, all those things that I mentioned before are issues that you're going to have to consider.
Gotcha. Yeah, that's helpful. I actually just realized that somebody asked that question as I asked you the same question. So hopefully
Yeah,
that answers that.
and we can help you evaluate, we can help document your start of construction and give you some certificates. Like there's probably some other firms out there doing the same thing, some accounting firms and whatnot. It's really important to document everything and to actually establish that start of construction period. If you feel like you're going to be audited, or if you want to make sure that if you are audited, that you have a very low risk of losing your ITC, we need to put some documentation together that clearly outlines what we did and how we did it, and all the the pictures and the POs and the canceled checks and all that stuff goes into a document where we can present that to the IRS and say, here's our evidence that we started construction on this day.
Yeah.
So
Yeah, no, that's really helpful. And just as a resource for you all, if you go to our walker-blue.com website, and you end up on our blog, we store an immense amount of white papers and information in there that covers probably most of these topics. So if you ever, wanna just a quick reference guide to how to deal with something or how to get started construction qualified. There's going to be a white paper in there that covers most of the stuff. And again, you can always reach out. We can help talk you through it, but it's an easy, place to reference some of this information if you're up for going in there and looking for it. All right. So did I skip a slide? Yeah, I skipped that. All right, so let's talk a little bit about some of the technologies that have the most runway post OBBBA. Hey, like Josh mentioned, geothermal systems, ground looped heat pumps, distribution controls tied to that eligible property is, probably one of the most booming areas of use of the ITC that we're seeing. And part of the reason there is that this technologies that are fall under Section 48, not 48E, they're not being phased out. Section 48 wasn't being phased out as part of the OBBBA, which is keeping this around till 2032. So I think we got like a 10-year runway on these projects. So, geothermal is going to be around. Hopefully, there's not any major legislative changes again on some of these, which I already think they did most of their damage when they came out with the big beautiful bill. If anything, I think it'll get better, not worse, but you never know. But for the time being, it's probably wise if you have the opportunity to put in a geothermal, system on a project, and the financials make sense and your client's interested in it. Um, Designing those there's I hate to, don't quote me completely on it, but there's a pretty good chance that that's going to still be around, at least as you know, with the caveat of you never know what Congress is going to do. But there's definitely the opportunity there. Same thing for battery and energy storage. So battery storage or or thermal storage are all technologies that as well kind of have that long lifespan. Um, and solar. Josh, you want to talk a little bit about how there's the misconception around, when your solar project needs to be completed, because there's a lot of folks who really think that July 4th is the do or die date for solar. which
Yeah, and I mentioned it earlier. So I think, um, yeah, to bring a little more focus on that, everybody is focused on July 4th, and it's definitely like ideally that's the date that you hit. So, kind of backing up a little bit, the IRS considers so there's two ways that you have to there's two things that you have to prove with every ITC project. You have to prove your start date, and then you have to prove that you were continuously under construction until your completion date. And if you have a gap in there, or if you're proved to not be continuously under construction, then your completion date is actually like when that gap started, right? Um, so we need to prove out continuous construction from start to finish. The IRS gives us somewhat of a mulligan, so to speak. So we have a 4-year window with the IRS that they are assuming that you're continuously under construction where you don't have to prove it out. So you don't have to show documentation that we didn't have any gaps in our construction, as long as we start and finish within 4 years. And it's actually a little bit longer than that because it's like the end of the calendar year of the fourth year. So we have about 4 years from start to finish that we have to stay continuously under construction. So the only reason I mention that is because July 4th is the first expiration date with solar. So if you are under construction by July 4th, then you're eligible for the ITC, and it doesn't matter when you complete the project. You have essentially that 4 years plus the end of the calendar year to complete your project before you bring on some sort of scrutiny of being continuously under construction. So if you get started in March of this year and it takes you 3 years to complete your project, you're good. You get the ITC. If you miss the July 4th start date and you don't get started until September or even next January, you're still eligible for the ITC as long as you complete the project by December 31st of 2027. So you have one or the other to meet. So you can either get started by July 4th or you can get finished by the end of 2027. Obviously, the preference is to get started early because you've got 4 years to get done. If you don't get started early, you're going to have to just make sure that you keep a handle on your project and that you get completed in time. So you're going to be up against that expiration date. But assuming you get done before the end of 2027, you're also eligible for the ITC, even though you missed the July 4th deadline. So it's one or the other. And some people forget about that expiration date in 2027 is kind of the other. Everybody's trying to get started before July 4th, but it's not the end of the world if you have a short project that maybe only takes a few months to get done. Don't sweat it. Just get it started, get it completed by the end of 27, and you're still going to be eligible for the ITC, assuming that you meet some of these other things that we're going to talk about, like FIOC and domestic content and some of those things that could impair your ITC.
yeah. Um, so the other, kind of fact of the matter here is that when we talk about geothermal systems and battery energy storage systems, but specifically geothermal, there is a high likelihood of bonus stacking, and the domestic content is very, very achievable. We somebody asked about, what is the solar secondary technology, often a complement. Again, so we see a lot of battery energy storage projects with the solar attached as as the source to feed the batteries. That's a very common, and we're seeing more and more of it. And there's an opportunity for you guys to go back and look at your solar projects that you've done in the past and potentially, now come in and do a battery energy storage project as well. So yeah, there's lots of opportunities. Again, some of the ones we really want to kind of hone in on are the geothermal and the battery energy storage, where there's a ton of opportunity to and a lot of time to develop these projects and start thinking from a design forward aspect on how these projects are going to come about. So, all right. Um, Josh, if you could get into a little bit of kind of some of the factors and some of the things that engineers can control within the ITC project, that'd be great.
Sure thing. So, yeah, so design engineers, obviously, when we talk about geothermal, David had mentioned that we have a high probability of stacking. So geothermal, we generally see a domestic content bonus getting added on. Geothermal, unless you really design engineer it away from domestic content, is much easier to meet domestic content. We have a lot of pipe in the ground that is typically going to be domestically manufactured. We have a lot of heat pump components that are typically domestically manufactured. And then a lot of the other parts in between, pumps, piping between heat pumps and the well field, the duct work. A lot of this stuff is domestically manufactured, and so that's a pretty low hanging bar for geothermal to meet. Solar, you really have to engineer it in. As you know, solar domestic panels are really hard to come by. Solar, I mean, the inverters, we have some domestic inverters that are a little more available, but they require optimizers and things of that nature that are extra expenses. So there's a lot of work that goes into making a solar project domestic content eligible. So design engineers really can kind of control some of these outcomes, especially with domestic content, of how much money your client's going to get back. Some of the other things, like that first bullet point, system boundaries. So we do a lot of projects where we have, say, a school district has got 6 or 7 solar fields going in. And do we have to treat that as one big project, or are those 6 or 7 individual projects? And the way that you engineer that project, the way that you pull the permits, the way that you design the systems, you can sway that one way or the other. If you want it to be one big project, you can design it to be one big project. If you want it to be 6 or 7 individual projects, you can design it that way. So there's some thought process that goes into it, and the more you know about the ITC as a design engineer, the better that you can meet your clients' needs and do what they're wanting to do in terms of the ITC, and make it easier for them to claim the ITC depending on what situations that we're dealing with. Um, yeah, and then the last part that we'll get into is a lot of the documentation that we need to back up the ITC that we're taking. We like to make our product audit proof. We want to provide enough documentation where the IRS does an audit and they don't have a lot of questions. They don't have a lot of things that they can poke holes in. It's a pretty tight, um, you know, document that we put together. And so but in order to do that, we need help from the vendors and the equipment manufacturers and all of the parts and pieces that go into the system. We have to get really good documentation from a lot of different places. And so the engineering firm can help with that by, having really good relationships and kind of working that into the specs and into the project documents, where if you're going to supply the equipment or the materials for this project, then you also have to supply us with this documentation, instead of making this something that the owner has to chase after and chase after and chase after in order to just get their ITC. So those are just some of the highlights of how you as an engineer can help your client make their ITC credit a lot easier or a lot more difficult.
Yeah. And to kind of emphasize on Josh saying, hey, most of you all, the more you know about the ITC, the better. You don't have to know everything about the ITC. You have a good partner in Walker Blue that bring us in, bring us in early, bring us in often. We want to be involved. We want to help you design these projects and answer your questions and get you the clarification you need. We truly believe that if we help you as a design engineer, we're eventually gonna receive the positive karma back of being awarded some of these projects to go and help your client and client file these ITCs. So again, just keep us involved. You don't have to go about it on your own. You can always bring us in to help with that. We're on these calls all the time, constantly kind of giving advice on these things. We have, 4 team members that we are very comfortable getting you on the call with, who are very familiar with the ITC. So, there's usually someone available we can put on one of these calls or on get your questions answered in a fairly timely fashion. So. Um, all right. Let's talk about, hey, where do things go wrong? What are some of the things that potentially go wrong, specifically around domestic content? Um, so, Josh, you have a ton of domestic content experience. You trained our team up on this. Do you want to take this one?
Yeah, and I kind of mentioned it earlier. That third bullet point there with the specs. You know, we work a lot with our design teams and with our owners up front when we're putting together the project documents. We want to make sure that everybody understands what they're being asked to do. So specifically for domestic content, we want to make sure that it's in the project documents that we're trying to get the domestic content bonus for the ITC, and that these are the things that we need you to do as a supplier, a manufacturer, as a contractor in order to qualify for the domestic content. And so we are happy to review your specifications. We're happy to review all your project documents to make sure that before these things go out to bid, that the language is in there that sets the expectations of anybody that's going to be on this project so that they understand what they're getting into and that they're going to provide this information to us at some point. So kind of like backing up to the second point, vendors, domestic content is it's a very detailed calculation. It's not a simple matter of looking at where a heat pump is manufactured, and then if it's manufactured in the USA, then it's domestic content. That's not how we have to evaluate domestic content. Using the cost method, we have to evaluate domestic content at the next level down. So the domestic con the heat pump would be manufactured domestically, but where are all the parts and components that are in the heat pump manufactured? That's the level that we have to go to. So we have to know, all the parts and pieces that make up the heat pump, how much those parts and pieces cost, where those parts and pieces were manufactured. And we need a lot of help from our vendors and from our manufacturers to get us that data so that we can put that in we're not going to like disclose all that information in our report, but we need to have that calculation on hand if the IRS was to come and ask for it so that we can say, look, we did that deep level dive on all of your products and we have the data. If we don't have the data, we're just kind of guessing at it and hoping that we don't get audited. And that's not a real good place to be, because if it's too hard to get when the project's recently completed, how much harder is it going to be to get 4 or 5 years down the road when the IRS says, if you don't give me this documentation, then I'm going to pull the domestic content bonus away from you. So we don't want to be in that position. So, um, you know, those are two examples. We can't really rely on the manufacturer marketing language. We got to really get in touch with the vendors and the manufacturers. And it is a tax issue. It's a design issue because we want to design the domestic content, but then we've got to prove that we got to prove it out. So think of it as we want to kind of go through the audit process ahead of time. We want to kind of do a self audit and pretend that the IRS is doing an audit and what are they looking for. And we want to have that documentation bundled up and available if that day ever comes down the road.
All right. So you mentioned, that there's methodology involved. Do you want to get into the two different
Yep.
methodologies associated with the domestic content and kind of a little bit more detail around that?
Yeah. So with geothermal, the cost method is the only method available. However, with solar and wind, safe harbor is a second method that the IRS came up with in order to determine domestic content eligibility. So we have these two paths. If we're doing a solar project, we have both paths available. If we're doing a geothermal project, all we have is the cost method. So let's start with the cost method. The cost method is what I just described. We have to go um, to a deep dive. We have to look at all the components of a solar panel and where those components were manufactured. We have to look at all the components of an inverter and where all those components were manufactured, and do basically a cost analysis of domestic and non-domestic manufactured components and determine the percentage of domestic content that that component makes up. And we do that for all the components, all the materials, all the equipment. And so now a percentage of domestic content that is on the site based on the cost of the components of each part. So it's a very detailed analysis. It requires a lot of cooperation between the contractor, the vendors, the manufacturers, and so on and so forth. Um, so we have to do it for geothermal. For solar, we don't have to do that unless we have some reason to do it. The preferred method for solar is the safe harbor method. Way easier, way more straightforward. Anybody can calculate it to some degree. Most of the solar manufacturers have put together documentation that proves what percentage of safe harbor they're meeting and kind of lays out their paperwork and shows it to you. So oftentimes it's just simply like to our panel manufacturer, hey, can you send us your safe harbor tables? And they'll send those over. And so that's all we need from them. So with solar, since that's probably where, if we're using the safe harbor, we're doing a solar project, we don't run into wind too much. But it's a table, depends on if your project is roof mounted or ground mounted. Um, and then you have two different tables to look at. And we're for a roof mount system, we're only looking at your racking system, your inverters, and your panels. So those three things we're going to analyze, and based on the tables and what parts uh, of those pieces of equipment have domestic content in them, you get certain percentages, and you just add up your percent at the end. And if you're last year you needed to be 45%, this year it's 50%. You just add up your percentages, and that's what your domestic content is. For a ground mount system, it's only the inverters and the panels. So you don't get that. Most of our racking systems are pretty easy to find domestically. You don't get it on a ground mount system. So you have to have a heavier domestic content load in your inverters and your panels if you're doing a ground mount versus a roof mount. But both of those methods are pretty straightforward, and it's the much preferred method. It's the more audit proof method. It's the easier to calculate. It's the less costly method for us to provide. And so you have both paths available to you for solar, but typically we're pushing you into the safe harbor method just because it's, again, it takes us less time, which is, somewhat preferable, but the better reason is because it's a lot more watertight. It's much harder for the IRS to poke holes in a safe harbor method than it is for them to poke holes into the cost method.
Great. Thank you. So, we keep talking about getting things early. What we're finding is we're losing the opportunity to leverage um, the data collection around domestic content and FIAC if we don't get it early, right? We have all the leverage, before, while the manufacturer's trying to sell you on using their product, that salesperson is going to be very proactive in getting us the information that we need or putting us in touch with the right person, and there's going to be a lot more responsiveness to it. After the job's done, after they've been paid, the responsiveness, I don't know, I can't say that word today, but the responsiveness is much, much less. For some manufacturers are great, but we do find that we struggle more to go and get this information. We got the team here in our Boca Raton office who's calling on these manufacturers and emailing and communicating and trying to go through the chains of command to go get this information. And they really have no help and no leverage on these back ends. Are we still going to help you? We're still going to try. We're still going to do our best effort to do that. But if you can put it in the contract, if you can do it early and like Josh said, get everything lined up where the information is expected that we're going to be asking for this stuff, get them comfortable around it, or they won't win the job. It gives us a lot of ability to control that opportunity. Um, so yeah, I mean, here's kind of a base example. We luckily didn't lose the domestic content on this geothermal project, but we recently had a project where we're coming down to the tax filing deadline, and we've been getting a runaround for 3 months from the heat pump manufacturer. And I won't throw any of the heat pump guys under the bus, but we getting the runaround from the heat pump manufacturer, not getting the information we need. And we get it. We get that there is a hesitancy to put out this proprietary, trade information about, their cost associated with it. But it's information that we need. We have no choice to do the cost analysis. We need that information. It's part of the reason we interject ourselves as that third party. Happy to sign NDAs, happy to sign whatever's needed to assure them that we're not going to go back and share this information with you or your client on the other side. The only time it would ever be exposed would be with the IRS. Once we can get that message across, we were able to maybe have some better results. But on this particular project, we got really close to having to file the return and having to leave the domestic content at or off, even though we knew, in our from our kind of experience that it would qualify. So it's hard to leave that 10% on the table on a multi-million dollar job. You're talking a couple hundred grand that we're leaving on the table if we don't get this information, or we have to go back to the client and say, hey, do you want to take the risk on this? And unfortunately, we can't defend it if it doesn't, if we don't have the information to defend it. But so these are all decisions. That's not the best practice at all to how to go about this. So again, kind of focusing on being early and often when it comes to collecting this information. So, to talk a little bit about, kind of some of the other case studies that another case that I literally recently just saw, got involved with a design engineer who brought us on to speak to their client, had early meetings with them. The project is like, had broken ground. It's 10 or 15% in process. It's new construction. And the design engineer just off it, kind of, I asked the question about, is this project over a megawatt? Is the project under a megawatt? Um, and this client basically, the design engineer is like, I'm pretty sure it's under a megawatt. Great. If it's under a megawatt, you're exempt from the prevailing wage and apprenticeship requirement. Awesome. You'll automatically, if you'll automatically get the 5 times multiplier. Shouldn't be an issue, right? A couple days later, we get, our initial request for information back from the client and start going through their plans and information, and come to the determination that this project is indeed well over a megawatt. It's not even close. Um, and at that point, now we start scrambling because, I'm like, hey, what's the plan on PWA? Because this wasn't talked about in our meeting, and client kind of responded as far as, hey, we didn't account for it, so I think we're gonna, forego it. Well, now we're talking about, think this is like a $10 million ITC cost project, taking that credit from potentially a 40% or even 50%. I think they had energy community, 50% down to um,
And
12 or yeah, 10 or 12%. Um, so you're talking 5 times less of an ITC, which was a pretty hard pill for me to swallow. I don't like leaving money on the table like that. We're in the tax saving business, not tax letting get away from us business. So I called the client up and I said, "Hey, let's get everybody on the horn, all the subcontractors. Let's have a conversation around, because I think we still have time to get this done. So, again, it's important to kind of bring us in, let us kind of get involved. This particular client won't miss that again because once this happens, you won't miss that megawatt threshold. But when you're not in this every day, like Josh and I are, you're not necessarily looking at all the potential areas that could potentially go wrong on these projects. So again, kind of knowing where the project is under or over a megawatt, and if it's not, if it's under a megawatt, it's really important that we get involved early to track the prevailing wage and apprenticeship requirements. That's another service that we offer. So getting us involved early lets us bring in all the contractors. Ideally, it'd be ideal for us to get involved at the contracts phase so we can help with some of the scope of work language around the requirements with the PWA because a lot of people think, hey, prevailing wage, yeah, we've been doing prevailing wage for years because we have to comply with Davis Bacon and blah, 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 blah. The prevailing wage and apprenticeship requirements that came out under the Inflation Reduction Act that govern these ITCs bonuses is very different than it's not very different, but it is different. There's some nuances around specifically the apprenticeship component of it and how it interacts with the wages that can really put you in a position of either having to endure a substantial amount of penalties on the back end because there are like self-reporting penalties and things of that nature if you miss some of this stuff. Um, but potentially bringing, like I said, this credit down from a 50% credit to a 12% credit is pretty impactful. Or 10% credit, I'm sorry. So that's an area that just kind of keep an eye on it. There is ways we can track the payroll reports, we can track all that for your client and monitor it. We do it for a ton of our clients where we monitor all the subs. They submit the weekly wage reports to us. We run it through the system. We built the software for it internally that we run everything through. We'll flag any non-compliance issues with plenty of time because you do have a time period to cure non-compliance. So you have until the end of the first month of the following quarter in which the non-compliance occurred to get it cured. So having somebody proactively monitoring that is really important. And some of these issues happen more often than you would expect them to happen. Even when you're like tell your contractor, hey, or subcontractor, hey, you have to meet this requirement. Well, they're not PWA experts either, right? So they're at the end of the day, they're a contractor. They're good at doing whatever subcontracting, skill that they're bringing to the table for your project. They're not necessarily, Inflation Reduction Act experts and PWA experts. So it's good to have us kind of help along the way. So. Um, yeah, kind of on that topic, some of the things and ways that we can help, from an ITC partnership, we can define the ITC boundaries during the schematic and design phases, help write domestic content language into the specs and RFPs, coordinate with the manufacturers for data request early on, align the engineering, procurement, and tax requirements all together. And again, more than anything, we're here to try to prevent these last minute fire drills because they're not fun for anybody when you think you're getting 3 million bucks and it's about to be a couple hundred grand and everybody's freaking out. So it's important to kind of prevent those things from happening whenever possible. So. Um, Josh, I'll let you take kind of FIAC on the next pressure point. I know somebody asked a question regarding the FIAC rules in particular for energy storage components for solar project. What's the max Chinese content allowed? I guess it would be any foreign entity of concern. We're not gonna blame the poor Chinese all on their own.
Yeah, but they pretty much are. Most, we don't
I
get
know, I
solar
know, I'm
panels
joking.
from Iran too often.
Yeah.
So yeah, FIAC is a little bit of a gray area right now where, we're moving forward based on the information that we have to certify these projects that are starting construction this year. Hopefully before we actually get to completion of some of these, that we have some more guidance from the IRS. Um, but what we do know, the foreign entities of concern are we can only have up to 40% this year. So what that means is uh, it's kind of I guess, the inverse. So that means that you can actually have 60% of foreign entity product in your um, equipment and materials before you're out of compliance. So it's kind of written backwards in the legislation. So this year's threshold's 40%, and then it goes up from there subsequent years. But it's basically the way that that reads is that it's 40%, that you have to have at least 40% non-FIAC material. So foreign entities of concern, again, that's also that's a moving target this year. It has a set number of, they're going to redefine who is considered a foreign entity of concern this year. It's mostly going to be China. Obviously, Russia's in there, Iran, North Korea, some of those types. There's one other one. I can't think of the other one, but that's our list this year. China obviously is the big one because we get so much from China. So as long as you're 60% less of your equipment comes from China, that we're going to be in good shape. We're assuming that it's going to be a similar calculation as domestic content. The way that we have to go about proving it out, hopefully not. Hopefully, if the guidance comes out, it's maybe a little bit easier of a calculation. But I think it's safe to assume that if you meet domestic content this year, you're going to meet fiat. Domestic content's 50%, fiat's only 40%. So, and domestic content is US purchased, right? So, in order, like for fiat, you just can't purchase it from these certain countries. So, you could buy it from Mexico, buy it from Canada. Those are all fine. Those aren't fiat countries. So, if you're buying panels from other places that aren't US made, but maybe also not Chinese either, maybe Taiwan or some other country like that, Vietnam, those are eligible. Those are going to be non-fiat countries, so that you're going to be in good shape there. So just kind of look at your project, I think, at this point, and kind of figure out how much is fiat, kind of like what's the issue here. If we have 60-70% of our costs are products that we're buying from China, that could be a problem. It's going to be a problem. But if you're only in like the 10 or 20% range, you're probably not going to have an issue. But we're still going to be doing a FIOC study to provide you that documentation so that if you're audited, your client's audited, that we have the documentation to prove that we are FIOC compliant. But again, it's stuff that we have to take care of. We can't start the project and then hope for the best. We want to make sure as we're developing our projects that we've got FIOC in mind, especially if we haven't started construction yet. We're starting construction in 26 or beyond. We need to worry about it. And again, I said it before, geothermal is not a FIOC issue. So if you're doing a geothermal project, you don't have to worry about FIOC. So don't worry about it.
Great. So again, just a couple key takeaways. Geothermal and battery storage have the longest runways. Engineers influence the eligibility around the ITC credit size and audit risk. Domestic content, definitely it's important. We've talked about it to we beat it over a dead horse at this point, but it needs to happen early. And then same thing on sizing of these systems. We need to know early so that we can get involved and help. So. Yeah, we'll jump into some of the questions that we have. We've got some good questions here. I'll feed them to you, Josh, if you want. Can you clarify what qualifies as start of construction to meet the July 4th date? I think you kind of clarified it, but if you want to just kind of touch on it lightly again.
Yeah, I mean, high level, if you're under a megawatt and a half, then you can use one of two ways. You can either have your owner pay 5% they have to basically occur an expense of 5% or more of the total project costs, not just not just the solar panels or not just the inverters, like labor, material, everything of your solar project. Like that has to be 5% or more. If your owner pays that, expenses that on their books, it's non-refundable. They can't get it back. They can't back out of it and take that money back. That date that expense occurs on their books is the start of construction date. The other way you can do it is start physical construction. So that means something substantial. You can't start physical construction by doing a survey or by doing a test hole or by designing some plans. You have to actually start physical labor on the project and doing something significant like pouring a foundation, installing a racking system, something that's actually like building up, not tearing down. So demo doesn't even count. It's got to be something that you're building up. So under a megawatt and a half, you can do either one. Over a megawatt and a half, you have to do the physical construction.
Yeah. Which kind of touches on the next question, which does permitting application considered start of construction?
Nope.
Um, yeah, which is a pretty easy no there. Yeah, it literally has to be involved in some of the activities Josh just mentioned. Um, so, sorry, cancel. All right, next question is, can you name a domestic content inverter manufacturer? Josh, I'll let you. I know you're in the weeds on this stuff. I don't know if you want to answer that.
Yep. Go to the next question and I I know it, but I don't know it. I was talking about him yesterday, but I'm not great with names. So go to the
Yeah.
next question. I'll pull it up.
Okay, cool. So related to the safe harbor method, does a carport solar follow the same rules as a ground mount solar?
Yeah. Carport mount is a ground mount. So your carport structure is your racking system, right? So um, that needs to be, again, we didn't really touch on it, but domestic content, in order to be eligible for domestic content, the other little um, piece of the puzzle is that all of the steel that you use has to be 100% domestically made. So if your carport has any steel in it, that has to be domestic steel because your racking system is essentially your carport. So your carport canopy is your racking system. That makes it a ground mount system. And then, like if we're using the safe harbor tables, from there we're just going to look at the inverters and the panels because the racking system is not eligible for domestic content. This under the safe harbor method.
Gotcha. Kind of along the same lines of questioning. The last question we just got here is, what about placed in service and permission to operate from the utility? Is that sufficient for the 1231/27, or is PTO
Yes, that's
required?
what we typically will use. Yeah, PTO letter is typically kind of the letter that we use to set the completion date of the project. So, we're going to keep using that as the completion date of the project until we get closer to the end of 27. And then, we might start digging into maybe some other ways that we can uh, consider the project placed into service. But for now, as long as you're getting your PTO letter before the end of 27, that's what we're going to use as evidence of project completion.
Yeah.
And then back to your inverter question, it's Solar Edge is the inverter that we typically run into for domestic inverters. Um,
Yeah.
they're they're made in Florida, and so those are, like I said, we've seen those on tons of projects so far. Um, so Solar Edge is what it's called.
Yeah. We got three more questions. I know we're at time, so we'll try to jump through them pretty quickly here. So, how have we been navigating material assistance and FIOC requirements?
Just like domestic content, same way. I mean, we haven't really had to address FIOC yet because, we've spent the last 3 or 4 months making sure projects get under construction before the end of 25 so that we don't have to deal with FIOC. So now we're just now really starting to get into some projects where we're having to work through FIOC. And again, kind of the big thing is if you're a direct pay customer, you have to meet domestic content. So FIOC's really not an issue for a direct pay customer because we're focused on getting domestic content met. If you're not a direct pay customer, FIOC's going to be your only issue. And typically, we're just kind of working through, kind of like I said, the finger in the air for early on calculations, just making sure that we don't have a lot of Chinese products, that we're looking at other places to source our panels, our inverters that are non-China produced, so that we can just avoid the issue altogether. We haven't really had an issue yet where we felt like we were on the line where we have to really dig in and do a deep dive analysis of FIOC just yet. So we're hoping for IRS guidance to come down before we have to do something like that.
I assume this question is related to fiat, but it's how is Hong Kong treated? Do you know off the top of your head?
I don't. I haven't dug into that. I would assume that's going to be China, but I don't know.
Yeah.
That's a good question. I haven't been asked that question yet, and it's obviously something we're going to have to figure out because it will be probably something that we'll have to deal with.
Gotcha. Yeah, and feel free, whoever sent that message in to shoot me or Josh an email and we can look into it and get back to you. All right, last question here is for TES thermal energy storage, does FIOC apply? And how does domestic content interplay with BABA required for federal funded projects?
Well, domestic content is it's tougher than Baba. It's tougher to, buy American. Baba has a lot of give and take to it, from my understanding, where, certain components can be Baba compliant and not actually, they wouldn't even meet domestic content, right? Because domestic content's just a more rigorous way of having to prove out the domestic content, because just because it's manufactured in the US doesn't make it domestic content. It's how much of, remember though, it's what percentage of the components of that piece of equipment is domestic content. So BABA is not that strict. We don't have to go to that level of detail to qualify something as BABA compliant. So domestic content, if we meet domestic content, we're going to be BABA compliant. So domestic content and BABA are almost two different sets of calculations. So if we were asked um, to prove BABA compliance, it would be a total different set of calculations than being asked to prove domestic content compliance. Does that answer?
Yeah, yeah, I think that's it from yeah, so we again really appreciate everybody being on. Sorry we went a couple minutes late. There's just so much good information we had to get you guys. So feel free to reach out if you have any questions and look forward to seeing you all in the next webinar. Thank you.